Hey, what's up, folks? This is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Well, today's video is titled Bitcoin Implosion, What the Chart Tells Us. So we're going to be digging into exactly that, all right? Now, I've been looking for quite a while now, especially on CT, at different chartists and how they are kind of looking at those historical charts, what they think is going to happen based on this entire cycle as a whole. And it really hasn't happened to date, and we kind of keep running through this same thing, right? Why isn't it happening? And that's what I want to talk about in today's video, is exactly where we are, why I think we're there, and some of these things that seem obvious to me, but it seems like no one else is looking at them. So that's what I want to share with you. And I'm going to tell you what I'm doing this whole time and what I plan to keep doing as we stay in this current bearish pattern, all right? So, if you enjoyed today's video, make sure to hit the like button. If this is your first time to the channel, make sure to subscribe. And if you click the bell, you'll be made aware whenever I post time-sensitive content just like this. And now, let's get it going. All right, so if you've visited my channel before, you know that I want to get right into the meat and potatoes of this and look at the chart. So here we go. Now, the first thing we need to look at is the volume drop-off that started in July and has yet to return. So this is something that I noticed when Plan B's models started to get a little choppy, right? Now, the big problem is there's no volume, okay? I mean, that's kind of obvious, but you really don't hear a lot about this. So why isn't there any volume? Well, one answer is because the retail investors in the market are currently finding more value in altcoins as opposed to Bitcoin, all right? Now, in a poll that I took a few days ago, and let me just say it's a small poll, but it is a poll, out of 20 respondents, when asked which one to buy, Bitcoin or an altcoin, all 20 said altcoin, right? And at the moment, I gotta admit, I feel the exact same way. So, further Glassnode data shared by Will Clement on CT seems to confirm a drop in retail interest, with transaction fees dropping substantially after the peak around April-May, so last spring. This image here shows Bitcoin volume between 0 and 1,000 down substantially since July. Adding to that further, we have this image that shows Bitcoin volume between 1 and 10,000, also down substantially since roughly the same time frame, July. And to top it off, we have this image here, the whale chart, which shows the volume over 10 million plus has been increasing since July, okay? So that kind of makes you think a little bit. If all of those are spending more than 10 million are buying more and more and more, and retail isn't, that's kind of interesting, right? So, further, heading back to the TradingView chart, money outflow in the market cipher has been increasing, not decreasing. So this means that not only are people selling their Bitcoin, but also that those that have bet on Bitcoin going up with leverage are probably being liquidated on a regular basis, right? Because everybody thought, based on historical data, based on the last two cycles, that the chart would be significantly higher right now. So there's probably a lot of people that have bet on it going higher, and then it continues to go lower, all right? Now, the volatility giveth, the volatility taketh away, right? Now, I could be wrong, but I don't understand, and I just want to say this out loud, why I never see any of the guys on CT that look at the historical data ever talk about the market cipher, right? So this is where CryptoFace is a genius and was totally onto something with that money inflow and outflow. Follow the flow of money. It's that simple. Follow the flow of money. And if the money is flowing out, then it's not going to go up, right? The money needs to flow in for it to go up and for the volume to increase, okay? Pretty easy. Now, lastly, we had the fabled death cross. That I actually predicted a few weeks ago just recently occur, which essentially is the 50-day EMA, that's the moving average, falling below the 200-day. This is a bearish signal, all right? Now, the last time that that happened, for context here, was June 22nd of 2021. And when it did, it stayed bearish for roughly, let's say 2 months, all the way up until August 15th, 2021, okay? So, what I want to emphasize here is that I'm well aware of what the chart should be doing based on historical data of the prior 2 cycles, but why it's not actually doing that are the 3 reasons that I just outlined, okay? Now, what I also feel is extremely important is that where many crypto millionaires in particular, these are all the people that I typically follow on CT, right? That are always sharing about, you know, how they made all these millions and whatever, okay, fine. Where they really made their money was not by actions that they took in the bull market, but rather by actions they took in the bear market, okay? This is really, really, really important, all right? Now, we could be bearish for the remainder of 2022. Sure, that could happen, right? We could be bearish for just a few months. Sure, that could happen too. Now, right now is essentially the best opportunity that you're going to have for quite a while to build positions. So just the other day, the Bitcoin Fear and Greed Index was at a 10. So for context, that is basically historically low and very rare, all right? Now, truly an opportunity that rarely comes around. Today, we're sitting at a 23, so it's a little bit higher, but we're still pretty fearful, right? What it all means is that you need to be greedy when others are fearful, okay? Now, I want to share what I posted the other day because I think this is dead on for what's happening right now, which tells you exactly where we're at in this market, right? So in response to Will's post, I said, thanks for sharing, Will. The data confirms the game. Now, number 1, whales will accumulate Bitcoin, which has been proven in that Glassnode data, right? Number 2, they'll then manipulate the market with massive buys, creating retail FOMO, okay? This is how retail does it, right? Retail will buy, number 3, at much higher prices. Number 4, the whales will dump the market and liquidate leveraged traders. This is what happens over and over and over and over again, right? Number 5, we could potentially have a blow off top. And number 6, the cycle, if we still have it, ends and we start over, right? I then added this nugget. Where we're sitting right now is the whale accumulation phase, number 1 above. We'll know we've entered number 2 when volume from retail returns. My guess at that time of the post, and still my guess, is probably the end of the first quarter of 2022, where we're at now, or the beginning of the second quarter this year. So, in the meantime, in full transparency, exactly what I've been doing this whole time since the market's gone bearish is I have dollar cost averaging buys currently going on VGX, on Polkadot, and I've been buying a lot of Jasmy along with it, all right? Now, I also have plans to pick up some more KCS, that is the KuCoin token, which has done great. KuCoin's growth has been tremendous. And then, you know, I'm probably also going to do a video, maybe later this week potentially, on KuCoin as well as VGX and kind of how they compare to BNB, right? There is so much potential in those, it's crazy. So what I really want to emphasize right now is that with this, you don't have to be a millionaire to capitalize on a bear market, right? You don't have to have thousands and thousands of dollars to capitalize on a bear market. You don't need tons and tons of money in stable coins or anywhere else for that matter. You could simply be buying small buys every day that it's bearish. That's it. It's really not any harder than that, okay? So for some final thoughts here, you know, maybe it sounds like I'm pointing out the obvious. Maybe it doesn't. I don't know. You know, when I look at those CT charts that are out there that all of the guys are looking at, the historical data, no one for quite a long time was talking about volume. That's finally starting to come out that people are talking about volume. The next thing that no one is talking about is the market cipher money inflow and outflow. This is critical. So I say it all the time on this channel that if you really wanted to trade Bitcoin constantly, just look at the moving averages, right? And the moving averages coincide with the money inflow and outflow. So all you got to do is look at the green or the red wave. Is the red wave getting bigger? Well, we're still bearish. Is the red wave getting smaller? At that point, we will be bullish, right? Because things could turn around. If we see a green inflow, that means things could really be on the up and up, right? So all of this isn't hard to do. And I think what I'm trying to say is that there are a lot of channels out there that, they're paid Discord groups, they're newsletters, etc. And really anybody could find this information. All I'm looking at is TradingView, and I'm looking at moving averages. I'm looking at that market cipher for the money inflow and outflow. All of this is free, completely free. That's what I'm looking at, right? And it kind of tells you what's happening. Now, I personally am not a day trader. I am really not a leverage trader either, though there is a leveraged platform that I have been messing around with that I will be sharing with you all on this channel at some point in the future. But for the most part, for me, I am kind of a long-term hodler. I think the older I get, the more I look at crypto like a retirement account, just like I would, a 401k. You kind of contribute to it regardless of whatever's happening with it. This is the exact same thing. The only difference here is I'm a little more tuned into it in the sense that I start buying when everything goes down. And because crypto is so volatile, it's always coming back up at some point. And so when it goes up, am I buying anything? No. What I'm doing then is potentially selling stuff, right? And then later it'll go back down and then I'll keep buying, okay? So the bottom line here is I don't think you need to be a investing genius to figure this out. It's really not that complicated. But if you scoured the internet, I think multiple sources make this sound more complicated than it is. And truly, it simply comes down to the volume, the market cipher, and the EMAs, all right? So that's it for today's video. Hopefully that clears up the picture. I've also shared with you exactly what I've been doing all along the way. As I said, I keep adding to those positions, and I'm loving it. I love it when the market's down. I keep adding. Eventually it'll go back up, and I'll be up big time, right? So that's what I'm doing. Just wanted to share that today. And I also wanted to throw out a special shout out at the end of today's video to my dad. So for those of you who follow this channel, I haven't been on here in a little over a week. My dad suffered a heart attack over the holidays, and I have been down there with him daily. All right, I've been out of town, I've been away from YouTube, etc. So that being said, he is on the mend, he's on the up and up, he's doing better and better each day, and I couldn't be more happy about that. So I'm very pleased with where his recovery is at and what the future holds. So I think the future is still very bright for him. Truly excited. And in the meantime, he and I are kind of competing on the side between who has more VGX. So that's kind of funny. So anyway, big shout out to you, Dad. All right? So that's it for today's video. I hope you enjoyed it. If you did, make sure to hit the like button. Don't forget that I'm also on Twitter at KIR Finance, where you can find me tweeting and retweeting on a regular basis. Sometimes, like this past week when I don't have time to make videos, that's exactly where I'm at tweeting because I can get in that daily. So by all means, follow me there. I've also now got a merch shop. You can find the links below. With my spread shop, it's www.KIRfinance.myspreadshop.com, I think is what it is. Anyway, shirts, hoodies, hats, mugs, etc. That's all there if you want to get something. If not, great, whatever. And then I've also got my NFT project, the LDC skulls, which are out there, which are kind of the mascots of the channel. All right. So lastly, as a friendly reminder, this is Jesse with Keeping It Real Finance, channel that always has your back and tells it like it is, and I will see you on the next one.